is just to kind of walk through that strategy guide real time and show you some of those things, because people have different learning styles, right? Some people can read it, pick it up right away. Others more of a visual learner, audible learner, things like that. So that's what we're here to solve for. And then if there's any like outstanding questions after seeing the demo, and then things that I maybe didn't go into great detail about in the strategy guide, you're able to ask those questions here. Was that kind of what you wanted there?
Exactly. And we're also recording again, so feel free to go ahead.
Okay. All right. As I was saying, so now having that context, I'm just going to go in and start kind of walking through some of the things that I do on a typical daily basis, rather than just showing you like how you start out from the beginning. But in all reality, seeing what you're going to see here, you're going to understand like how you can get started if it's something you would wish to do. I do want to add a disclaimer that this is in no way financial advice for you. This is merely for educational purposes. I'm just showing you what I've done and how I realized success using this method. But trust me when I say like I'm not telling you all to go out and do it, right? Because different people are in different situations. Some can afford the risk. Some need to manage the risk a little bit more. So totally understand, right? Without further ado, we'll jump into it. So right here, what you're looking at, you just see the staking dashboard. Not all that impressive right now, right? With total per day C4 earned, and that's because the majority of my crocs are actually on loan. So what that means is basically there is 2 sites that I have used to for this strategy. The one is LiquidTokens, and the other is Lending Pond. Okay, and these 2 websites make it possible for you to take your NFTs, as you can see here, various NFTs, and lend them out on any terms you set, right? So for example, right here, you can see there's like an amount of ADA that someone is asking for. There is a rate, a return, and then there's a duration. So this loan terms they're asking for 4,700 ADA. They will pay back that amount plus 7.5% after 21 days. If they do not pay that back within that duration, then whoever has funded this loan and lent out the initial 4,700 ADA will not recoup their ADA, but will keep the NFT instead. So that's kind of what a loan is on the NFTs and kind of how that works. And the terms are set by the borrower specifically, right? There's no automated system for that currently. It's whatever the interest rate the borrower wants to set, and then duration and amount of ADA, and then the lender will choose to accept or not accept. Okay, and so here's the interface for LiquidTokens, right? And I guess I'll just start here. So first thing I would do is I'll go over to my active tab. Now, obviously, when you're connected, you'll have a different view depending on if you've used the site or not. This shows me how many borrower requests are currently active. I have 5. There are these 5 loans that you see here. And then you can click on them and view them and such. And then here's borrowed loans. So currently on LiquidTokens platform, I have 104 loans that are active, meaning they are funded and I'm using that ADA that I have got for these loans, and they will have a repayment date that is coming at various points, right? Like for example, if I click on one, this one, it was set for 28 days when I created it. There's still 27 days, 4 hours, 29 minutes, and 0 seconds, right? And then if I go down further, you can see like, go towards the bottom. Here's a loan that was for 35 days and it has 1 day remaining, 20 hours, 28 minutes, so on and so forth, right? So, and then this little green indicator kind of helps you too. It lets you know, it flips to yellow, orange, and red respectively once you get in that 1 day to 24 hour range, right? And then it kind of helps you visually to understand where you're at. Many borrowers don't have as many loans as I do. So that helps me kind of like see what needs to be repaid first. But others, it might be a little bit easier, right? Because they only have a handful. So what I'm going to show you right now is there's a particular loan that I want to pay back currently, right? And that's this C4 player pass. You may be asking like why, right? It still has 28-day duration on it, right? Well, the loan amount is for 2,800 ADA, right? And what I'll do every single day, multiple times a day, is I'll go to, JPEG store and then look up where we're at with C4 player pass and my other loans, right? So specifically for this instance, the C4 player pass is got a floor of 64.50, right? So if I take 2,000, I know that there's interest tied to that loan, but let's just say 2,000. Well, actually, let's even add the interest, right? So 2,000 times, it's 10% interest, but I'm going to add 0.125 because there's a 2.5% fee also with every loan I borrow. So 12.5, right? Added to that 2,000. So it's 250, right? ADA. So that's 2,250. Okay. The floor is at 64.50. Okay. So I'm going to take that amount, divide by 64.50. Sorry there. And then you have your loan to value rating right here, or LTV. You'll see a lot in the discussions and channels on Pond and LiquidTokens. This means how much ADA essentially are you providing for the NFT versus what its value actually is. So right here, as you can see, that loan to value amount for that player pass that I want to repay is only about, rounding up even, it's only 35%, right? My loans typically, and what's considered a medium safety loan, kind of not a hard and fast rule, but more like just a what people feel like is a safe loan, is something more in the ballpark of 0.7, right? 0.7 seems to be more of a fair loan to value ratio of NFT. So if I took that and then multiplied it by the new floor price of a C4 pass, that's 4,515 ADA, right? Subtract that by what the current holding the loan value is, right? Not repaying it.
But I can't see the chart that you're showing.
Oh, I'm sorry. You know what I need to do? Thank you for speaking up. I need to switch my screen share for the whole screen. Okay, hold on 1 second. I was basically, it wasn't a chart, it was a calculator. So here we go. That's probably a little bit better. So all I have is a calculator up here. So let me just step back again and walk through these steps. I took the amount of the loan value plus interest, right? That was 2,250, divided it by the current floor price, and it gave me a loan to value of about 35%, right? So I'm saying typically, as like a quote unquote industry standard, right? Loan to value of 0.7 or lower is considered more safe for both parties, right? Depending on what the NFT is. So I want to get closer to that loan to value than 35%. So that new value would be 4515 ADA, right? And then if I subtract that versus what the value of just holding the loan is, that 2250, that gives me a value of 2,265 ADA. That is the amount that I can make on top of this C4 pass if I go and repay it today, even though it still has 28 days. I can repay it today and then re-lend it out at a 0.7 loan to value, right? And this is important because when you make this ADA back, you have a choice. What do you want to do with it, right? Do you want to buy another NFT of the same collection? You know, do you want to put it towards something else? Or do you want to go back and repay another loan, right, that has a lower LTV than you could potentially get by repaying it early, right? So that's what I'm going to do here. And now I'll do it real time because I know that was a lot of talking. So now I'll show you what's happening. So I go back in here. This is the C4 player pass I'm talking about. This one's 2,800, right? I think the previous one I took was 2,000, but so the ADA amount will be a little bit lower, but regardless, same strategy. Okay, so I'm going to repay this. It's probably going to tell me I need to clean my UTXOs. That's a fairly common issue. So let's see. Oh, hey, what do you know? Okay. Okay. So I'm going to go ahead and sign the transaction. And we'll see how fast the blockchain is moving today. I don't think it's as slow as it was last night. So it shouldn't take too long. So now while we're waiting for that to come through, on Fluid Token, CSS transaction pending. On Lending Pond, when you do the same thing, it just gives you a little green confirmation screen. You'll see it a little bit when I do one of these, and it just says like paid successfully, loan paid successfully, right? So I'll show you Pond in just a second. Okay, so let's move online pending. That's a different fund that looks like came through from Lending Pond. We're still waiting on this one to clear. We'll go over to Pond in the meantime. Okay. While we're waiting for that C4 pass to come back into the wallet, I'll just walk through Pond a little bit for you. So here's what Pond looks like when you're in the borrow tab. When you're on the lend page, it looks, you know, both sites have a different approach to this. I personally, just from a I borrow a lot, right? And I think Fluid Tokens UI helps me a little bit more, just with its layout, where to find like which loans are mine, and a couple different things. And also they offer bundles and stuff, so it's a little bit easier for me to get lots of loans out if I need to than it is for Pond. But they both have a version 2 coming, and so things will change, right? That's just the current state of things. So here's the lend tab. If things would load, you'll see all the available lending options available. But for us, we're concerned with the borrow tab. This shows my assets that I can borrow from currently. It shows if I have currently any active loans that haven't been funded yet. Here's the one you see. And then active loans are actually loans that are funded, just like we were looking at one that I paid back on Fluid Tokens. So those are here, and you can see like the amount of days, right, to pay them back. And then, so I'll show you, we'll pay back one of these as well, because I'm pretty sure, yeah, okay. Because I have some, are those the only C4 player passes? Okay, and that one just got down at the bottom, just got funded. Okay. So we're just focusing on the C4 player passes currently. So this is what it looks like when you repay one on Lending Pond. And then after I get these, then I'll show you, re-borrowing against them, right? When they're returned to the wallet. Okay. Okay, and that's what it looks like on Pawn. So loan paid back successfully, and then you wait for it to come into your wallet. Okay. So now I have the 2 C4 player passes that'll be in my wallet, right? And with my strategy, kind of like what we're showing here today, the whole point was that I want to get closer to the loan to value on the floor, right? So me personally, I am going to take these C4 player passes and then read loan them out and then use that late ADA to leverage again. Now, I don't want this session to be entirely just showing you how to work the sites because it feels really like rudimentary, I guess, and basic. So I want to know from you all, like, what are the burning questions you have right now? Like seeing what I'm doing, like what things would you like to know? Would you like to see?
Is there a place we should be putting this? Where can we type?
Oh, come off mute. Just ask me. Yeah. I'm not looking at my DMs or anything. Yeah, so just ask away.
All right, word. Man, I didn't quite follow the benefit of paying off that lower priced one. I guess that's the question. That's the statement in question form, please.
Yeah. So I can go over that again a little bit, and just stop me if like it sounds repetitive or if there's something specific you're asking. But that's kind of this math right here. Basically, what I do on a daily basis, multiple times a day, is I'll look at my most loaned assets. So right here is the C4 player pass, right? Doesn't matter. You can look at OG Crocs. You can look at apes. It applies to anything, right? But when I bought, for example, when I bought and loaned out this C4 player pass that I just paid back, right, for 23.58. Okay, if I take 23.50,
but that's someone else's pass that you.
No, that's mine, right? That I bought and loaned out.
So you took 2,500, right? Or you took 2,200? Sorry, the number's a little blurred. How much did you get for that originally?
I got 23.50 for this player pass that I loaned out right here, number 410. Let me zoom into a little bit. That might be helpful.
You're good now. Thank you.
Yep.
I think my monitor sucks too, but keep going.
Okay. So I was given 23.50 for this player pass right here, right? And we're just gonna say I typically go close to the 0.7 loan to value. So just taking that, I probably bought this player pass around 33.50, right? Or 33.60, whatever I may have even bought it for cheaper, but that was what the floor price was around when I lended it out. Do you follow that so far?
Yes.
Okay. So floor price is now 64.50. It's almost double that, right? So if I take that same unit of measurement, that 0.7 loan to value, and multiply it by 64.50, right now I can get this much ADA for it. That same pass, right? So
okay. I follow you. You're just making a higher percentage, or it's the same percent on a higher number. So cancel the low number and get the higher percentage, get that yield. Thank you for going back on that. Sorry for the repeat, but thank you.
No, that's what we're here for. Yeah, absolutely. I'm glad that makes more sense. Yeah. So then I would just repay that back and I'd take the difference. And so that's just me. But like I said, there's other avenues you can take there, right? You could, in theory, just take that ADA and then use it as a stepping stone to get you somewhere else, right? Like that's not my strategy, but let's just say your real target was an ape, right? You wanted an ape, you can't afford the entry point, you got a couple C4 player passes. You can essentially do that back and forth, like repay the loan, buy a new one, repay the loan, so on and so forth, all the way up until you get to that entry point of 10.8K or something, whatever it is right now, and then buy your ape. And then you can let these go, these C4 player passes, if that was your strategy. Does that make sense?
Yeah, somewhat. No. Yeah, go ahead. Keep going. Thank you.
So basically what I'm saying is I haven't defaulted on any of my loans, right? Not that I can think of. So I repay them all because I want to keep these assets. I don't want anybody else taking them. And I believe that there's a higher value in holding them, right? And then just leveraging them to get more than it is to just default and let them go. Because if I don't pay this C4 player pass loan back, then sure, I got to keep 2350 ADA, but whoever lent me that gets to keep my player pass if I default and don't pay this back. So I just let one go for, how much more below the floor, right? But what I'm saying is, if your strategy, your ultimate end game was not to be holding these player passes specifically, and instead you wanted to get yourself like an ape, then you could do that. You can basically repay the loan, take it out again, repay the loan, take it out again as the floor moves up to get you close to that 10K ADA entry point, and then buy an ape. And then you would just default and let these loans expire. And then the lenders get to keep your C4 player pass, right? And then you get buy yourself a new ape. If that was your strategy. That's all I'm saying. That's not mine, but that's another way you can use this to your advantage.
Now, the 7%, you're earning that 7%? I
No.
thought the lender earns that.
The lender earns that. I'm earning, if you want to talk percentages, we'll take, what was it? It was basically what would it be? Oh gosh, I'm terrible at math too. So percentage increase of, you would take 2250, right? Let me see, 2250. Let's do it this way. Okay, so percentage change. Okay, we started at 2250. Okay, and then the number is now 4515. So my percentage increase is actually 100%, 101%. Right? Do you follow that? Does that make sense? That's my return on investment doing this?
I don't know how you get to keep that though. I feel like it's always going to go back. But you have the new loan out.
Correct. So this is assuming that, so I just loaned it out, right? So this is my percentage that I'm already keeping because someone just gave me the loan for 1450. So I already made 100%. Because they gave me the ADA and funded a new loan. Now, it's my choice to default on that loan or pay it back again and move up my value, right?
Okay, but so let's say you pay that back. Now, where do you sit? You have your pass again, and how much ADA do you have?
Are you saying when I pay back the next loan, the 1450 or the 4550? Yeah.
Isn't that going to cost more than they gave you?
That would depend on what the floor price is that day. So if it remains stagnant, then yeah, that's a loss, right? Or it's a non-change at that point. But if it moves up, then you're making a percentage on that. And that's very important. And I'm glad you asked that question, because this is why this leveraging strategy is so important, is because what I am doing here is I am periodically buying the floor NFT, listing it for sale for 0.7 of its value, right? And then the floor moves up once I get funded, because I buy another one. And then I do it again and I buy another one. And depending on how thin the floor is and all the other buyers and sellers in the market, I'm able to leverage my position and make more money and acquire more assets, right? But it only works as long as the floor is moving in the upward direction, not the downward direction, right?
Okay.
So here, for example, let's go to my profile really quick. And I think this is really important. So I'm going to dive a little bit deeper into this. Like, let's go to activity, because I need to show like what I paid for. Actually, can I just do this and go here? Like, look at these two passes and go to trading history maybe. Things are moving a little slow. I apologize. Okay, so I'm going to go to this pass right here, right? And then I want to see my trading history or price history. Okay. So I purchased this one 20 days ago for $22.50, right? Okay, now let's go back to the other one. Okay, this one now. And I purchased this one for $2,100. Okay. So think about that. Basically, I purchased this one for $2,100. I purchased the other one. What's that? Oh, maybe it's just background noise.
Crypto Fin, if you could mute, please. There you go.
So there we go. There's two passes. I bought one for $2,100, bought one for $2,250. My total out-of-pocket cost for these two NFTs was $4,350, right? Now I've bought other player passes since that point, right? Since what, 21 days ago, I bought a few more, right? And they were always the floor price, always the floor price. That's important to keep in mind. So the price has since gone up, right? So now the price is $64.50, right? So let's just add another one in here. Let's say I bought my first C4 player pass at $2,100. Then I bought my second one at $2,250. So I'm out $43.58. Okay. Now let's say I'm pushing the floor price up, right? So the next one is like $3,500, let's say. Okay. So now I have 3 passes, but I'm out $7.8K, right? Well, even if the floor price is now, let's just say when I bought the 3,500 one, it went up by, I don't know, just 200 ADA. That's it. So now the new floor price, let's say, is 3,700. Well, 3,700 times 3, because I'm holding 3 and that's the new floor price, that's 11.1K. It's not 78.50, right? So if you do that, you've still made a 3.2K profit just on buying up the floor and loaning them out, right? Do you follow that? Does that make sense?
I do. I have a question. I don't want to like digress, and I don't want to.
No, that's okay.
Keep moving forward, but so it works great if it's climbing and climbing, but let's say it plateaus and corrects down to 5,000.
Mm-hmm.
Now you would you have gained there? All of a sudden you might default on a couple of these, or you pay them back at a loss.
Well, that all depends.
How does the floor not crash after these start defaulting and everyone starts getting back their coin and just wanting to get their money back? And
no, very, very real scenario. So one, I got to ask a question. So are we making the assumption that I didn't own any? So I own 0 player passes before this scenario? Like let's say I own, let's just for the sake of argument, let's say I didn't own any. Like my first purchase was at 2,100, my second purchase was at 2,500, right? And then my third purchase was at whatever, 3,500. Okay, so assuming that I didn't own any of the underlying asset before I started using this leveraging strategy, then yeah, I have a choice to make. You know, do I want to pay them back and take the loss because I think in the long term there's more value there? Do I want to default instead and not take the loss and just keep the ADA that I had, right? Any that I made off of the final loans? Those are basically your options at that point, right?
I mean, you could take the ADA and buy the floor if it's lower.
Exactly. That's exactly right. So those are your options. So there's actually not like a substantial amount of risk there. It just depends on how risky you are as a person, really. It's how much are you leveraging. So I put myself in a position to make sure that I'm still paying back my loans and I'm not getting too freaking crazy over my head, right? I go where the momentum goes and I just help it along. That's just my personal strategy. Now, what's important to make note of too is that scenario we just talked about is under the assumption that I did not own any of the underlying asset. I did not own any C4 player passes. However, I've been buying since C4 player passes were, well, obviously I minted, right? But then I've also been buying them off secondary market since people were listing them for 650 ADA, right? So even if I had like 3 times 650 ADA, that's only like, 1950. And then if you take 6,450 times 3 minus 1950, I'm up 17.4K ADA on those, right? And that's assuming that I just keep the 3 that I own and let all my others default. Does that make sense?
Yeah, it does. Thank you. It's amazing. I mean, I definitely see the idea of, on your side especially, there's somewhat less risk there because of that. I'm not saying that defaulting is the way to go, but you could default on that.
Yes, you could default on it. Now, I'm gonna.
Can I hop in? I think.
Go ahead. Yeah.
I think I understand what James means. I also just wrote it in the chat. It's basically you buy something for a certain price. Let's say 5K, or let's say 1,000 to make it easy. You buy something for 1,000, then you lend it out for, and you push the price up with, let's say 10%. So it goes to 1,100, the next floor. So if you list it for, 0.7, maybe it's like, 800 from that new floor price. So basically your downside is there only 200, right?
Yes.
But if you keep pushing up that floor price by buying up the floor, then the new floor price also goes higher, and you can also relist your player pass higher again. So you're basically getting more ADA back, right?
That's correct. And I'm not the first one to come up with this strategy either. Someone sent me, I think it was Clem Fandango sent me a name the other day, and so I looked them up. And apparently someone's been doing this with like Bored Apes. They own like 66 Bored Apes or something. And I'm not sure if they do the exact same strategy. It sounds like they might sell one every now and then after they pushed up the floor price so much that they'll like sell one and then, like that way they keep more than they sell kind of thing. Because you can do that too off of the strategy, right? That's another path you could take is you can choose to like then sell one if you've made, if you were at 1950 and own 3 player passes and you didn't want to default or keep loaning, then you just sell one, like your fourth one, right? And you sell it for the floor price and you get to keep 3 player passes plus, the additional ADA, right? The difference, which is like probably would come out to like 37 or something like that. Quick math, terrible math. But yeah. That's not my strategy though. And I'm going to drop a little bit of alpha here because I know I was told it was okay. There's an announcement that's going to be made about it very shortly. What does holding Crocs give you when you're not lending them out? This sweet C4, right? Well, what if I told you that you will now be able to loan out your Crocs on either platform, both Fluid Tokens and Lending Pond, and continue to earn C4 on them?
I'd say you're crazy and it's not possible. Tell me more.
It's happening. It's going to happen very shortly. The team is currently working through that with both platforms. So you're going to be able to buy a Croc, keep it in your dashboard, right? And then until you want to loan it out, and then go to one of these sites, loan out your Croc, but you will still continue to earn rewards on that Croc that you loaned out, and it's locked up in a contract.
So what, like the Swamp platform will just know that if it's in a smart contract, still give rewards, that kind of thing?
Yeah, basically, it's just an API that looks to make sure it's in one of those specific smart contracts from either lending platform. It checks it and then just makes sure like the previous owner, quote unquote previous owner, right before it went to the smart contract, whatever their stake key is, and then they'll get the rewards.
It's badass to see them working with these other places to make that possible. That is so bullish for the space.
Oh, absolutely.
Wow.
So now I can reveal a little bit more my strategy knowing that. So that's why I'm not selling any of my assets, my Crocs or babies, like radioactives, none of them, because this number, I think, should probably conservatively, I think it's around 9K per day that I'll make C4. And that's a conservative number. It'll probably be a little bit more north of that, but that C4 at the current price, right? Let's just even take, I don't know what it is today, but let's just say it's 0.09, right? Times like 9,000. C4 per day. What was that? 810? Is that right? Am I off there? Is that 810? Oh, I know why. I did that wrong. So 9,000. So I think it's 81. That's basically what it is. Times 0.009 is what I meant to do. So I'll be earning 81 ADA per day. Just times 3 days, that's 2430 ADA. And what that helps me do, that additional 2430 ADA, is pay off these loans, right? That's an additional 2430. So then I could just pay off the loan, keep it, right? Pay off the loan when I want to start exiting and then just lowering my, position, right? Because like I said, I don't want any of these assets to go. I don't want to default on anything. So I'll just slowly start paying them off with that. And then continue to loan out those that I need to just keep that liquid there so I can pay off the loans, but I'll be able to use less and less as time goes on. And then I'll just use a lower loan to value for them, right? So I'll start loaning out player passes and Crocs and everything at like, 0.5 rather than 0.7. Does that all make sense? And let me know if not. And then if there's any other questions too, let me know.
It's cool they added reactions on here, but no, it made sense to me. I appreciate you talking it through.
Excellent. Is there any questions in the chat? I can't see, and if I flip there, I think it's going to do a mirror thing, but just let me know.
One question. Was that your first loan?
What's that? Was what, my first loan?
Was I your first lender?
Oh, no. No, you weren't. I think you were my first
lender, maybe?
Yeah, I think so, actually. I think you might have been.
Come on, just give it to me.
Yeah. I think you honestly might have been first one to lend or fund my loan for Crocs. Yeah. Oh, okay. Yeah. If there's no other questions or you're still thinking about it, let me get into something else on the Fluid Tokens platform really quick for you. So there's a difference. Lending Pond doesn't have this. I don't know if they're planning on adding fungible tokens in the future, but Fluid Tokens, positions themselves as a DeFi platform, right? Which is more unique because you can lend on fungible tokens as well as non-fungible tokens, right? So you can see Cardano Crocs Club coin here. So this is like, this is playing with fire a little bit and flying close to the sun, but I'll tell you all about it anyway. So what I started doing here basically was the underlying asset, right, that you're getting returned here, right? So I'm trying to see what influences the price more of the other, right? Like, it does buying a bunch of Crocs at the floor price and pushing the floor price up, does that influence C4 quicker, or does buying C4 in bulk amounts, taking a loan out on that C4, and then turning around with that 2600 ADA that I got right here, and then buying more C4, and then doing it again, does driving up the price of C4 then drive the floor price of the assets up faster? So it's more like just a little experiment because I can take the chance because I'm in a pretty good position right now. So more to come on that, I guess, but I don't really know the answer yet. We'll see. But yeah, that's what I was doing here. Is the one thing I need to give feedback on right here is you can't see the amount that was in this loan, but I can assume it was, probably, let's see, 2600 ADA divided by, it's probably close to this, right? Oh, that's in ADA, and then you would multiply that by 0.01. Oops. I think I did that wrong. I did. It was probably around, what is that, 37 or 370,000? 37,000, something like that. But yeah, I would appreciate if the quantity was there. It would probably make it a little bit easier to understand. But yeah, that's what I did is I buy some C4 and then list it and then take a lower LTV on it and then go buy more and then do the same thing. Because that'll drive up the price real time, right? As you're buying it. It's not like a floor price. You see a real-time reaction out of it. The market will show you. So yeah. What else?
Quick question. Can you hear me okay?
I can.
Are you going to talk about or thinking about the infinite money glitch situation that you can achieve through like as an example, Lending Pond? So in the chat, I kind of posted up a kind of a write-up on the infinite money glitch. But so using apes as an example, so the Ape Society has that staking that you continue to earn your rewards. Well, you can actually, so you could take a handful of apes, go get loans on them, and then with the money that you got, and please understand, you're still earning society every day.
Right.
Or in the case of Crocs, you're still earning C4. You could then turn around and take the ADA that you borrowed and purchase more apes, and then restake those apes, and then go back and take loans on those apes. So
Yes.
right now, at the current price of society, the infinite money glitch trigger does not happen. But when you talk about society at 10 to 20 cent ADA, and what you basically have is you're earning enough in passive rewards to actually pay for your loan. So it's like free money. Kind of an interesting concept.
No, absolutely. Very interesting concept. And I think there's actually two ways to achieve that, like with Crocs and fluid tokens that I'm talking about right here. Because I think in one way, right, like you can take out a loan on your C4 that you're getting as a staking reward, loan it out, use the ADA, buy more C4, loan it out, take the ADA, buy more C4. You know what I mean? And then your percent that you're paying back on your interest rate, if you're able to just keep doing it, will be lower than like what you're earning, right? And then so you can do that with the coin directly, right? And you can do this with society too, I believe, on Fluid Tokens platform. You just gotta get it verified. So and then that's what I'm doing with the Crocs, right? So with Crocs, like you can do the opposite, right? And instead of going to the underlying asset of C4, you could go to the Croc and you take the ADA, buy another Croc. And that's what I've done essentially. I mean, I've been buying Crocs since they were at, it was like October 15th, I want to say, is when I started going on a massive buying spree. And I think OGs were about 140 or 145, right? When I started buying them, and now they're 1150. So there's a lot of ADA that I've been able to build up there and then continue to do this, right? And that's kind of an infinite money glitch in itself, because you are inherently responsible for pushing up the floor price of the asset you're holding, generating demand and a supply crunch. And the more momentum it gets, it kind of just snowballs, right? And what's even more important about all this, and why I'm sharing this education with all of you today, is because one, I'm not greedy. Like I'm in a great position. I'm okay, right? I started off with like 4 OGs and 8 radioactive Crocs. Okay. And I'm over, I think, 160 OGs, 90 something radioactives, 33 babies, and like 15 player passes. Right. So I'm okay. Like I'm not worried at all about my position. Me sharing this information with you, you can all use this and apply it to whatever NFT company you're excited about, or project, that's what you refer to it as, right? You can use it for Crocs, you can use it for apes, you can use it for whatever, right? Because if it was me and I don't know, like 2 other people, even just 2 other people using the same strategy, starting at 145 ADA and OG, this floor price would be about 5 times what it is right now, right? And that's just the truth. I mean, like that's just the math. If there was more than just me using this, because I didn't have a bunch of capital to start with. I started off by lending 1 to 2 OGs at like, 80 ADA. So.
But what happened? Like, what is your exit plan? Like, what all these loans will become due at some point. Like, how do you get out of all those loans?
So, did you hear the part about like you're gonna earn staking rewards while your Crocs are locked up in a loan? Did you hear that?
I did. So is it the plan that you're going to use C4 to pay off your loans?
Yeah. So my strategy is what I'm going to do is use my C4, right, to go and pay off loans, and then deleverage my position with these loans, right? So for example, like,
I'm sorry, I'm having trouble hearing you.
yeah, someone is not muted.
TRPI.
James, is that you?
No, I just unmuted to call it out. It's TRPI. Someone maybe with server rate, maybe muted, or him.
I've just muted him.
Okay. So say this is 2000 right now, right? And I'll be getting those C4 rewards from all my crocs, and I'll be able to pay this loan back like fairly easily, right? But then also keep in mind, like, all these loans out, I also have extra ADA that I've generated from these other loans, right? So like when one comes due, for example, like say this one's due in like 1 day, right? Okay, so I need 800 ADA plus 10%. Okay. I'll just pay that back and then lower the amount, deleverage. So then I'll loan it out for, I don't know, 500 ADA at 10%, right? So doing that in combination with taking a C4 player pass and loaning it out. This was loaned out for 2,000, loaning it out closer to 4,000, right? 4,000, which is around 0.7 of that. I will still be able to keep that ADA and then deleverage myself. So I'll get additional ADA. Yeah.
I'm just saying, I understand you're taking loans to pay off loans. And that's great as long as floor prices keep going up, but you're not going to be able to pay back all those loans on 81 ADA a day. So like, is that a concern for you in like 28 days when just a quick look at your loans, like a lot of them are due in 28 days or 30 days.
Right. So here's the thing though, is like you basically like you look at these can all be lent out for about 2,500 more ADA, right? Okay. So these are coming due. That's basically what? 7 right here. I have 7.5K ADA that I can take advantage of, right? Is that part clear?
Yeah, that part's clear. Yeah. But then another 30 days, you're going to have to pay that 7,500 ADA back.
Correct, but the value of the C4 that I'm accumulating and these, so for example, I have that 7,500, right? You're right. I will have to pay it back. However, in that entire span of 30 days, I will also be earning the C4, right? And the ADA from any of these projects, right? Any of them that are going up in value. Now, if they all went down, if the floor price on everything went down, then I would understand where you're coming from. Like that would be a concerning position, right? If everything dropped, yes, that would be concerning because then I would have to default on some of them, right? But I don't think, I think that's a smaller percentage or a smaller probability of happening for all of them to drop than just for like some of them to drop, right? And I can deleverage slowly. I've actually already started doing it, right? And started taking out less loans for less value. And the C4 will make up for it, right? That I'm accumulating the whole time. Did that make more sense or?
It makes sense, and I think it's all well and good when a project goes from 145 to 1100. But if the project stays stagnant, I just don't know how you can continue to make money if the floor price stays stagnant.
Then let's just absolutely. Let's let's say that happens. Okay. Let's say for floor price remains stagnant. Okay. I have 160 OGs, right? Let's multiply that by the current floor price. Let's even say it drops like another 150. You know what? Let's say it drops to 875 from where it's currently at. And this is only OGs. This isn't counting my RAs. This isn't counting babies. This isn't counting C4 player passes. That's it. Let's just take OGs for 160 times 875 floor price, right? That's 140K ADA. That is significantly more than these loans that I have here. I probably have about 25, maybe 30K ADA in loans right here. That's it, right?
Yeah, that's understandable because I mean, you bought in when we were at 145. That's where you kind of accumulated your 160 on the way up. But let's say one of us is just starting fresh.
Yep.
Let's say we have 5,000 ADA and we're starting fresh.
Mm-hmm.
How would that work?
Yeah, I would argue that there's actually less risk for you now at this point, starting fresh, right? Because one, everyone in that's watching the stream, they all have the same knowledge. They all understand how it works. And then I understand how it works, right? So you have more people that are potentially doing the same thing, just on a much, much smaller scale. And there's a supply crunch already. Like if we're talking specifically about just like OGs, right? Supply crunch already. If you look at the floor price, it's really thin, even from here, right? So even if you decided to just do it like on a small scale and do it like 10 loans or something like that, then you'd probably still be okay. Because you probably also owned the asset before it even got to this floor price, right? Or even just assume that you bought in at like 800. You're already up like 200. And the more the floor price goes up, even if you're only buying like a couple, let's say 10 people bought 2. Okay, well that's 20 OGs. What's the floor price after 20 OGs? Then you can decide what you want to do at that point. Like you sell one, right? Keep the others. You'd be somewhere around here probably. Like 1,300. So you decide what you want to do. You can either sell one, you sell 2, then you're still up a couple crocs, right? You're still up a couple. Or you sell them all. Or let's say, worst case scenario, you defaulted on all of them. Well, you still owned the underlying asset. So even if you couldn't pay back the loan that you got over leveraged on, the value of the croc that you held before you even started leveraging still went up in value, right?
Yeah, I think we're talking past each other just a little bit. My question is, what happens if the floor price stays the same?
Yeah. So, and not in my position, right? You're saying, so you own 0 crocs, 0 OGs. You want to start
Let's just do simple math. Let's say you have 5K ADA. You buy 5 1,000 ADA crocs.
Okay.
You loan them out for 700 each. So 7 times, so now you have 3,500 ADA.
Yep.
And you buy 3 more at 1,000 each.
Okay.
So now you have eight crocs that are all being loaned out. And let's say you do a 30-day loan. What happens at the end of those 30 days if the floor price is still 1,000?
So you can either cycle through the loans if you want to keep. You have basically a couple options. Do you think the floor price is going to remain stagnant beyond that 30 days? Yes or no? If yes, you can default. You can choose to sell a couple. You can hold them all. And how you would do that is basically you loan one, then loan the other, then loan the other once they get funded. And you'll probably take a haircut in ADA too, because you're paying the fee for the platform and you're also paying the interest. The idea is that the C4 should probably help a little bit with the fees and the interest, right? But it just really all depends on how many you're holding. But those are basically your options.
So you pretty much the floor price has to go up, or you're gonna. If it stays the same, you're losing. Is pretty much what you're saying.
Yeah. So like, let's say you're starting today, right? With assuming the current price of C4, assuming the floor price of OGs does not go up. That's even with you buying 5, which I mean, if you bought 5, right, you would already be up to 1,200 rather than 1,000. So you're already 200 times 5. What? That's 1,000. So you made 1,000 ADA there. But you're assuming that it also drops back down to 1,000, right? Then yeah, like you would be losing money. There's a lot of assumptions there, though, and for me, there's that's not enough risk, like to not try the strategy. But again, that's not what I'm here to convince you of, right? I'm just here to kind of tell you what I've done, how it's successful, and then for you to make your own risk management strategy.
Yeah, and thanks. And that makes a lot of sense. I was just more curious if you had a long-term plan to eventually get rid.
Sorry, you cut out a little bit. You still there? Uh-oh.
No, I'm also not hearing him.
Yeah, might have got rugged. But anyway, to pull further on that thread, just one last time is, if in that situation you were buying Crocs, right, to then loan them out, you would already be increasing the value of Crocs. So technically, it's impossible for the floor price to remain stagnant if you're getting into the leveraging strategy, because you're literally purchasing the floor price. So you're moving up the floor price with your purchases. So it already wouldn't be stagnant, right? And that's assuming that there's no other buyers in the market. You're literally the only one purchasing Crocs, type of thing, What else? Any other questions?
Can you explain us? Because you just said, like, I have 160 OGs, 90 RAs, and what is it, 40 babies or so. You started when the price was like 150, something like that.
Yeah.
Now looking back, of course, the price went up, and I think you had quite a bit of a hand in that. But how much did it cost you in the end? How much did you invest from that first starting moment until, let's say, now?
Let's see. JPEG store recap, right? This one we'll have to do an ad because it's going to look negative, like if we just take this, okay? So total volume traded, right? The 16 items sold here, I really haven't sold very many. I think I sold like an ape a long time ago when it was like 3.2K or something stupid. So let's just assume like 200,000 ADA was invested, okay? Say 200,000 ADA was invested. So what is the current floor price of OGs? 1150 times 149, so that's 171, 350. Then you take 100 times, I think OG or radioactive is probably like 430 right now or something.
So I understand what the total value is. But it's more like you started with a certain capital.
What is the total amount of ADA I started this strategy with? Is that what you're asking?
And how much did you put in on the way up? Like I understand, like, well, it's well over 250K, something, the value total now. But how much did it cost you to get there?
I'm not sure. I'm trying to understand. I'm sorry. So
you start
obviously
with capital. Let's say I start. I'll take the example of Joe. Let's say today I start completely new. I have 5K. I don't have any OGs. I don't have anything in my wallet. I start with 5,000 ADA. I know that my investment is going to be 5,000 ADA, right? That's my starting point. So how was that for you?
I think it was probably, I want to say I probably started with like my initial capital to start buying OGs, I want to say was like 8K. I think that was like my total liquid ADA when I started buying.
And when was that? That was like
October like 15th. I want to say it was right at a rare bloom just happened. And I think, yeah, so I think that was around the date. 15th or 17th or something. Yeah.
So 3 months ago.
Yep.
That's mind blowing. That's insane.
It is pretty crazy.
Of course. It's total value locked. So you still need to sell if you
right.
Want to value. That's something you have to take into account, right? Because you
yes, and I would say that obviously my strategy is a little bit different than maybe other people's strategy because some would just go ahead and start selling a couple of these and then retain a large portion of that. I won't sell unless it's absolutely necessary. So I think you said their name was Joe. When they were asking like, how do you deleverage, and like get out of this position if everything remains stagnant and doesn't continue to grow anymore? Well, first, the first thing is like use any other loans that I can pay off right now that the floor price has gone up, and then I can take advantage of that value outside of Crocs, assuming Crocs are staying stagnant, right? Then just use that, reloan again, buy myself a little more time, and probably leverage down a little bit, create the loan for a little bit less ADA, a little bit lower percentage interest if I can, and push it out like 30 days, right? That's option one. Then option two is if I don't have that available, I use the C4 rewards that I'm earning from staking, right? To pay off some of those loans. And then I go back to option one, is option one now a possibility that I've done that? If yes, fantastic, do that. If no, don't do it, okay? Then option three, the last option, right, in my mind right now, choose to sell the minimum amount possible for the floor price to be able to repay a loan that must be repaid and cannot be reloaned, right? Because if it can be reloaned again, then you can take a portion of that and then continue to generate a little bit more value and implement your very slow deleveraging strategy, right? So that just kind of like all those things, when you take that in consideration, it's like, there's really a lot of options available to you. And I just think that's a tribute to kind of the ecosystem that we have here, and the tools available on Cardano right now and what we can do. But yeah, that's ultimately what I'll do, and then if once that time passes, right? And let's say the first two options didn't exist for me and I absolutely had to take one of the third option, right? And sell an asset to repay a loan. I'm okay, with doing that. And then continue to accumulate the C4 rewards and then pushing out that time a little bit longer, because I would not do this with a company that I didn't have faith in. I'm doing it with Crocs. I'm doing it with Apes because I think there's long-term longevity there, right? Like it makes sense for me. I'm not out doing this with ADA idiots. I'm not out doing this with, any other companies that I don't think, have true like long-term value, right? These have to be absolutely projects or companies that I believe in. And that's why I only think it could remain stagnant for so long. And that's my conviction. If ultimately it comes back to bite me in the ass, so be it. Like, that's part of investing. I don't think any of us in crypto because we think it's safe, right? But yeah.
That makes complete sense. Thanks for the answer there. So let's say we saw your we understand the strategy now. So I don't want to put anyone to work to put this into into the works now. But let's say someone just the average Joe, not Joe and Jax, but the average Joe wants to start off with this at this moment. He has a couple of OGs. How would that person start? What would be your strategy? What would you look into?
Yeah. So, and this is outlined in the strategy guide. I'll talk it through a little bit. I probably had time to think about it a little bit more and write it down in there, so it might come off a little bit more eloquently. But basically, like, you take a company you believe in right now, right? Like for me, and this is my own personal opinion, I still think Crocs have a long way to run up. I still don't think they're where they should be in terms of their floor values for the collections. That's just my personal opinion. You can disagree or not, but to answer this question, that's my position, right? So then I would look, okay, well, if OG Crocs are at 1150 floor, right? And then radioactive Crocs are at 445, right? How much do radioactive Crocs give you in terms of C4 versus OG Crocs? Okay, is it exactly 50% of an OG Croc? No. Okay, then I'll probably buy a couple more of these, right? I mean, I'll even do it right now on the stream. So, you know, just to pick the floor price up a little bit more to where I think it should be at, right, in terms of the C4 rewards. Okay. So this is like, you know, me just talking through starting, you know, just starting with a little bit of ADA, like that's how I would start. Okay. Now I have that RA. Okay. So now it was 445 was the floor. Now the floor price is 450. Okay. So now what's 445 times 0.7? It's 311. Now I would turn around and go lend out that Croc right there on either Fluid Tokens or Lending Pond for 311 ADA, you know, with maybe like a 10% interest or something like that. And I'm pulling that number out because 10% interest is a little more enticing. And, you know, then some standard rewards. And I'm looking at the floor price, and I firmly believe that, you know, this floor could, you know, these two assets could be bought pretty soon. In fact, if I have more than just 445 ADA, let's say I have like, you know, 600 ADA, then when I get that loan, then I can buy this one. And then I loan that one out, and then I can buy this one. And then I loan that one out, and then I can buy this one. So like, what's 469, right? Times 0.7. So that's 328. That's already 17 ADA profit margin on this guy right here. Okay. And let's just say that's all you can do, like those four, right? Well, that's okay. You've already made, you know, 18 ADA. You can probably use that for the fees and stuff to repay these four loans, like cover the fees for them at least. And then you got what, 1, 2, 3, 4, 5 until 475. Someone's probably going to pick up a couple of those, and then you can do the same thing, right? Once the floor price is at 475, now it's 332, right? So now it's what, 21 ADA profit margin on that guy.
So this
right?
comes back to, so you bought those 4 Crocs. You on 3 of them you have a loan.
Mm-hmm.
Or 3, 4. No, on 3 you have.
Yeah, 3.
The first you have a loan. Then you realize that if you would lend out 70% of the 4th one, you don't make it anymore. You can't go any further. So then you're basically, then your hands are tied, right? And then it's waiting for 30 days. What are you going to do then?
So honestly, if it was me and there's assuming nobody else is buying a single radioactive croc, like it's just me buying them, then I'll take that first one and I'll sell it for the new floor price, right?
Right.
Like, why wouldn't I? I'll sell it for the new floor price, and then I'll do it again.
Yeah, then you can keep doing it.
Yeah, exactly. And that's why, again, this message is so powerful because there's strength in numbers, right? Like, even if everyone here today like only did this like 3 times, you would all be profitable, immediately profitable, right? Because you're buying up the floor. Not to say that you can keep that profitability, because the decisions you make after that point will determine if you keep that profit or not, right? Because you can take multiple paths. But I'm telling you, like, it's impossible not to be profitable if 3 people went and bought 3 crocs, because then the price would already be like down here, you know? I hope that tracks. I hope that makes sense.
That makes sense. Yeah. That's interesting. So yeah, well, one, of course, you look into projects that you believe in, that makes sense, because otherwise you don't want to deploy any capital in it. A second thing would be nice if they also give staking rewards, especially also when you lend them.
Very important. Very important.
Yeah, it's not that many projects yet that, or at least I know of. It's the Ape Society, and Crocs will be soon. And the third thing that you look at is preferably also a floor which is relatively thin, so you can easily push it up by yourself.
Correct. Like when I started and the floor was, 140 for OGs, it was hard to do by myself. I mean, I spent a lot of initial capital, pumping that floor. My profit margins were not very thick. They were pretty thin. But over time, as you kind of like break through those walls and continue to push the floor price up using this strategy, then the floors become thinner,
And jump in, right? Because they see the floor is moving by this building.
FOMO and demand and supply. Yep, all that.
And then you suddenly are on the front page of JPEG store, and then more people jump in. It's a snowball effect that you already said.
Yeah, it's hard to argue this strategy with like someone who's a complete cynic, because the reality is like you can't convince someone that there's going to be demand for something if the price goes up, right? Like you can't convince someone of that. It's either you understand it or you don't, right? So if you understand simple supply and demand, and you couple that with a project that has good news, good traction, and is trending, then it just makes sense that you wouldn't be the only one in the market buying the asset, right? Like it shouldn't take much to convince anyone of that, really. If you're still unconvinced, then all I can say is like you probably want to stay away. I don't know. There's not much I can do for you there. But if you do understand supply and demand, you understand like the fundamentals of like what NFT companies are trying to build, and then you're going to get staking rewards anyway and things like that. For me, again, not financial advice, this is a no-brainer. It's just my opinion. And the more people that did it, the faster and further this would shoot off. I mean, it would be exponential growth because there would be more users than just myself.
I've just heard from Briggles that also we need to stop the recording soon because he actually needs to leave. But we're also 1.5 hours in. I think it would be nice. If there's any questions, drop them in the chat. I think there's a lot of experts now that can also help out with it. But are you also willing to answer questions in DM if people have any?
Oh yeah, absolutely. Like anyone can DM me whenever. Yeah, I'm here to help. That's all this is for, is just education purposes. And if you have any questions, I'll answer them for you.
Cool. well, if there's any people that are going to do this, maybe it would also be helpful if at first, I don't know, someone is a little bit holding their hand. I'm not saying that you need to do so, but it can be it can be quite risky. So I think it would be helpful. Shall we leave it here?
Yeah, if there's no other like questions or anything right now, then yeah, like you can just shoot me a DM.
Cool. The stream is recorded, so we'll upload it to YouTube. Would be nice. If there's any questions, let Decimalist know. And thanks everyone for attending.
Thank you all.